Bitcoin just ripped past $112K and Ethereum's flirting with $5 grand again. Scroll your feed and you'll see rocket emojis and new all-time high screenshots. Cute. But the headline you won't see? A quiet, verifiable signal is flashing, same one that showed up in 2016 and late 2020 right before crypto tripled. Stick around. In the next few minutes you'll learn how to spot it, why it's already ticking, and what it could mean for the next year. Picture it. Bitcoin's up approximately 50% since summer, Ethereum's tagging along at 38%. Google Trends for Buy Crypto is stuck at 28/100ths, retail's still half asleep. Funding rates are positive but polite, and the perp premium is 12% annualized. Manic? Hardly. We saw 30% prints in March 2021. Those were the real, we're all gonna be rich days. So yeah, price is higher, yet the crowd's quiet. Classic wall of worry climb. But surface noise isn't what moves markets. The real question, who's buying before the crowd even knows there's a party? Answer: net inflows into spot crypto ETFs wrapped inside the 1940 Act. Snooze fest name, monster outcome. Last 2 times this regulatory doorway cracked open, total crypto market cap tripled inside 18 months. Why should you care about a dusty 1940 Act wrapper? Because it forces daily transparency, custodial segregation, and full SEC audits. Translation: pension boards, university endowments, and insurance committees can finally check the compliance box. When that box gets ticked, money doesn't trickle, it arrives in dump trucks. Look at the flows. Grayscale's Ethereum Covered Call ETF, ticker ETCO, snagged $420 million net in 5 trading days. That's more than the prior 8 weeks combined. Brand new Rex Osprey Dogecoin Spot ETF DOGE did $180 million on launch day, September 11th, biggest altcoin ETF debut ever. And the not yet live Rex Osprey Spot XRP ETF already has $260 million locked in its seed basket ahead of the September 18th open. Add them up. Just shy of $1 billion of fresh, regulated cash before cable news even spells Dogecoin correctly. October 2020, first wave of Bitcoin futures. ETFs under the 40 Act started pulling $100 million weeks. 90 days later, Bitcoin broke $20K, then tripled. Same playbook in 2016. Bitcoin Investment Trust, the only regulated game in town, saw 340% AUM growth right before the 2017 fireworks. Both times the asset went vertical after the institutional vehicles were in place, not before. Today the sequence is repeating, only faster. 2020 gave us one ETF family. 2025 gives us whole suites. Bitcoin, Ethereum, Dogecoin, XRP, Solana on deck. Throw in Ethereum's Pectra upgrade, Q1 2026, that drops the validator lockup from 32 ETH to 1 ETH, and you've got regulatory rails plus technical upgrade lining up for the first time ever. Oh, and central banks just hit the coordinated cut button again. Liquidity plus access equals rocket fuel. But ETF flows are a drop in the spot bucket. True, spot still dwarfs them. Yet regulated flows carry sentiment leverage. When a pension fund wires $200 million into an ETF, market makers hedge by scooping spot. Delta hedging amplifies that flow roughly 5x per every major sell-side desk. So $1 billion in ETF inflow can become $2.5 billion of spot buying pressure. And pensions don't day trade, so the bid sticks. Glassnode tags institutional wallets have stacked 1.1 million ETH since July, 0.9% of total supply, into addresses with zero outflow history. Bitcoin whale wallets, EKBTC, just hit a 2-year high. These wallets don't chase rips, they buy boredom. Guess where we spent the last 4 months? Boredom City. If history rhymes, the regulated inflow signal gives us a 6 to 12 month runway before mainstream FOMO wakes up. Doesn't mean straight up, expect 20% pullbacks along the way. But once the compliance gate swings open, and it already has, the path of least resistance flips bullish. So set your DCA levels now, write the plan on paper, and ignore the daily circus. When grandma asks about crypto at Thanksgiving, you'll already be positioned. If data first breakdowns help you cut through the hype, hit subscribe and ring the bell. Comments are open. Tell me which ETF flow you're eyeing and I'll pin the sharpest take. Bottom line, candles can fib, but regulated inflow doesn't. Spot crypto ETFs under the 1940 Act are vacuuming capital at record speed, the exact setup that preceded the last 2 mega runs. Pair that with Ethereum's coming tech upgrade, global liquidity spigots reopening, and whales pulling coins off exchanges, and you get the loudest whisper in finance. Watch the ETF flows, not just the charts, and you'll never arrive late to the party again.